shortly to understand how this negates the overall impact. But let's get in Nilesh Jain, Head AVP Technical and Derivative Research at Centrum on the show. Nilesh, welcome to the show and a pleasure to speak to you as always. Overall, the way markets did pan out in terms of Friday's session and the conversation that Neeraj was having with Chandan as well, how are you looking at Nifty and Bank Nifty, the levels that you're tracking and any entry points that you see?
Morning, Hiral. Morning, everyone. Right here. So first of all, the overall structure is looking weak as we have already seen a resumption of a downtrend. In the previous session as well, we have seen a crack below a short-term 21 EMA as far as Nifty is concerned. Bank Nifty is the weakest amongst all because it has been one of the laggard since last many trading sessions now compared to the Nifty index. Bank Nifty is continuously witnessing a bit of underperformance, and in fact in the previous session we have seen a structural breakdown as well. So sell on rise should be the strategy, specifically in the Bank Nifty. Till the time it doesn't reclaim its 21 as well as 100 EMA, both are placed exactly at 55,500. So I would rather wait and use any pullback if at all we see towards 55,000. That should be a good selling levels. And on the lower side, we are expecting Bank Nifty to fill the gap that we saw on 12th of May this year. So that gap area is likely to get filled, and Bank Nifty is likely to test 54,000 and below levels going forward. Coming to Nifty, there could be possibility of some bit of rebound after opening on a gap down note. There are a lot of short build-up positions are very much in the system, but short covering as of now looks unlikely. There could be possibility of some bit of rebound on the back of a pullback move, which is likely to get sold into. From sectorial point of view, we are witnessing a sort of a sector rotation. We are witnessing a good momentum in defensive space. On the back of that, Nifty may witness some bit of outperformance compared to the Bank Nifty since it has multiple supports as well. So immediately from intraday point of view, I would wait for important level of 24,600. If Nifty manages to sustain above the same, then there could be possibility of a strong rebound.
So those are the key parameters to watch out for at the benchmark level. Let's turn to the big brokerage call of the day. It's 9:05 and we've picked an interesting one for you. Motilal Oswal maintaining a buy call on Adani Ports. And Somit joining in to tell you about the key details from their latest report. Somit?
Quite a bullish note that has come in from Motilal Oswal on Adani Ports. They have maintained their buy rating with a target price of 1,700 rupees, which suggests a return potential of nearly 30% from the current levels. Now, what the brokerage here is saying is that Adani Port is charting a transformational journey and building scale and market leadership in the ports business. Adani Ports is targeting nearly 1,000 million metric tons of both domestic and international cargo volumes by 2030, and this will be aided by deeper integration into the DFC-linked hinterland corridors and industrial clusters, which will also drive the long-term growth for the company going forward. When it comes to the logistics business, that has been growing exponentially. The company has around 12 multi-modal logistic parks, 132 trains, 3.1 million square feet of warehousing space, and 1.2 million metric ton of grain silos. Now, they are saying that the logistic business aims to establish a nationwide presence by further developing logistic parks and warehouses. When it comes to the marine business, they are saying that the marine business is a fast-growing, capital-efficient growth engine. Marine operations have emerged as yet another high growth vertical for Adani Ports with a diversified fleet of around 118 vessels. The business has been strengthened by acquisitions that the company has done in 2022 and 2024 as well, and management has guided to a threefold increase when it comes to the marine revenues by FY27. Now, they're expecting Adani Ports volume to grow at a CAGR of around 10% over FY25 to FY27, and Motilal Oswal expects that this strong volume growth number will lead to a revenue CAGR, revenue EBITDA and PAT CAGR of around 16 to 21% over FY25 to FY28.
All right, so that's a comprehensive look at Adani Ports. The standard disclaimer, of course, Adani Ports part of the Adani Group, and so is NDTV Profit through the NDTV Group. But Nilesh, we didn't speak about your individual picks. Could you also comment on Adani Ports while you're at it? What are the views that you have on this one? Would you go out and buy? And what are the individual stocks that you're finding most attractive today?
Well, Alex, first of all, Adani Port, it is trading below its short-term moving averages. So I would rather wait for a breakout of about 1350 before buying the stock. The structure is not looking that promising. There could be possibility of some bit of a pullback. but still a breakout zone is still placed at 1350. Break above 1350 will open upside towards 1400 plus. So then probably it's a good buy. As of now, better wait for that breakout. Now coming to individual stocks, I have one sell and one buy recommendation. It's a kind of a balanced approach we are having as of now, looking at the market volatility. So on sell side, Shriram Finance has given a structural breakdown in the previous session. The structure is looking weak for this particular counter, and we may see further momentum to continue on the lower side, and this counter may drift towards 575 to 565. So it's a sell on rise, and 605 will be the stop loss. 570, 560 kind of levels on the lower side can be seen in this particular stock. Now coming to long idea, consumption space is looking positive. Looking at the recent momentum that we have seen in the stocks like HUL, Dabur, so all these stocks are looking positive. So HUL is a buy. Looking at the overall structure, we have seen a good breakout from a flag and pole pattern in this particular counter. So on the upside, 2750, 2780 kind of levels can be seen in HUL. Stop loss should be placed at 2660.
Okay, the pre-open rates have settled, and let's get them up on the screen. It's a very flat start. Keep in mind though, the last few days what's happening is that while the start is anything but flat maybe, in the first 5 minutes the markets tend to gravitate towards what the pre-open rates have been indicating. So maybe from a 16-point downtick, we might actually move towards a 60-70 point downtick, but it is not looking all that bad. So bear that in mind. I wonder if Interglobe Aviation has a deep gash or a shallow one, should pull that one up for you. Some of the textile, it's about a 3% downtick. So 5875. We'll talk about this stock in just a moment, but I want to mark the textile companies. They are down today. There is weakness in KPR Mills. There is weakness in Welspun Living. Alok Industries, probably still a textile company, down about 4%. And on the flip side, auto companies are doing really well. The two-wheeler companies in particular, Hero MotoCorp, TVS Motors. I wonder if Bajaj Auto is also in the green, should come up and probably doing well. So watch out for some of the two-wheeler names. Avinash, what explains this this uptick in the two-wheeler stocks this morning? Any thoughts?
I think, Neeraj, clearly the markets are looking more at domestic themes, and two-wheeler companies, have been recording double-digit growth. If you look at the performance of TVS Motors, very strong volume growth numbers aided by good profitability margins. And I think looking at Hero MotoCorp, I think not only have the rate cuts benefited them, but I think rural demand is bouncing back, and hopefully, GST rates come down from 28% to 18%. I think Hero MotoCorp should benefit significantly. So I think, the markets are looking forward for a much stronger growth trajectory for the next, couple of quarters, at least. Post-September, once the GST cuts come in, that would also aid the volume growth. So I think two-wheeler companies will be in limelight because numbers are now supportive. Markets are looking at very strong volume growth numbers, and that actually tends to make everyone believe that despite the tariff kind of headwind, these companies are unlikely to be affected that badly.
Big moves there. Nilesh, maybe we spoke about them, but I would love to get a view again, because post pre-open, these are the ones which are really zooming up. Hero, TVS, Bajaj Auto, Eicher up about a couple of percentage points. Is there an idea from amongst the two-wheeler majors this morning?
Right. So Eicher Motor is something that I wanted to recommend as a buy as well. It has given a good breakout, and it has hit a new record high as well in the previous session. So structure-wise, a good breakout can be seen in Eicher Motor. Positional target comes somewhere around 6,400 to 6,500. Buy and decline structure, good price and volume breakout, I would say, that we have seen in the previous session. So 6,050 should be the stop loss. If you get any dip towards 6,200 to 6,250, in that range, it can be bought for upside target of 6,400 to 6,500.
Well, Alex, consumption seems to be the name of the game, right? Because Avenue Supermarts, Varun Beverages, Indian Hotels, that's the cohort of stocks on the Nifty 500 which are making some smart moves this morning.
Yeah, and the two-wheeler players as well, especially in the context of what you spoke about this morning, what we addressed, the fact that the auto index as a whole is at overbought levels. So there is still buying at those higher levels. A couple of more stocks that we've spoken about, right? And Indian hotels as well, by the way, part of that consumption theme. On the downside, though, and I'm speaking about the 500, you have Interglobe Aviation, which obviously is under a tad bit of pressure, selling pressure coming through there. You have the likes of Alok Industries, which is losing about 4% or so, Shriram Finance. You know what? I don't want to get Nilesh's view on some of these financial names because they've been under a tad bit of pressure. Nilesh, what would you say? And generally, when you play that consumption theme, you would talk about some of these NBFCs. Would you buy?
Alex, we have given a sell on Shriram Finance, given the kind of structural breakdown that we have seen for downside target of 570, 560. So overall, the structure of these NBFC space are looking negative, given the stock structure of Cholamandalam Finance as well. If you see, the stock has witnessed a big crack in the previous session. Looks like it is heading towards 1440 levels on the lower side. So it's a kind of a sell-on-right structure. NBFC space as a whole is looking slightly on a negative side. Even if you see Muthoot Finance, it has a big gap up opening that we saw on 14th of August. So that gap area is likely to get filled. So we can expect a further dip towards 2600 to 2500 going forward.
Yeah.
So overall, sell-on-right kind of structure.
Got it. Sorry to rush you. I do want to ask Avinash one more question. Avinash, we discussed the two-wheelers on the technical front, but what would you pick from the two-wheeler pack at this juncture, even at these levels?
I think Hero MotoCorp looks to be quite interesting. I think compared to TVS or Bajaj Auto, I think Hero MotoCorp could possibly see a decent upside. Numbers have been pretty strong, and I think they have a large exposure on the rural market. So I would say that this could be a good bet where possibly one could compound at least around 15-16% over the next, say, 12 months.
Okay. Well, we have, Avinash, thanks for that idea. We have time for that one more question to be squeezed in. Nilesh, your one top bet for the morning, 20 seconds.
That will be from auto space. Eicher Motor, we are pretty much bullish on auto space as a whole. Eicher Motor looks strong for 6400, 6500. Maybe could be an intraday target, and 6050 should be the stop loss.
6,050 stop loss, 6,400. Well, the risk reward not exactly in favor, Nilesh. Maybe we'll talk to you post this open. But still, Nilesh is very constructive there. Keep in mind, it's starting off a couple of percentage points higher, and which is why maybe at these levels, is the risk reward really favorable with the stop that Nilesh is suggesting is the question. But the two-wheeler stocks are doing well. Let's see how the markets are starting off. Flat, 42 points. Let's see if we gravitate towards that 80-90 point downtick around that level that the implied open was suggesting. Banks are lower. IT, I wonder what is happening out there. Should pull up the IT index and see whether that is doing okay for itself or no. And then get the mid-cap and the small-cap indices. In fact, a 0.4% lower. Now we are sulking. Now we are correcting, starting to move lower. Banks leading the charge. Mid-caps flat, small-caps a third of a. Let's get the heat map up on the screen. Fair degree of red, I would presume. Not as much green except for two-wheelers, but actually a fair smattering of green too. So what is leading the charge lower is the key thing, right? You look at HDFC Bank, the principal culprit, heavyweight down in trade, accompanied by ICICI Bank, TCS, Infi. You have your four heavyweights which are effectively dragging the markets lower. We'll get the point contribution in a moment, but you will see it there. Hero MotoCorp 1.65%, not the 3% uptick, but 1.65%. Eternal, Eicher, HUL, Bajaj Auto, domestic consumption holding fort there. Can we get the points table very quickly? And you will see banks and IT there. HDFC Bank, ICICI Bank, Reliance squeezes in and enforces versus the counter provided by Eternal, very interestingly, and some of the other consumption names. But two-wheelers, Alex, on the upside, banks on the downside.
We were speaking about this, Neeraj, and I think this proves what we were talking about. The fact that generally when you talk about foreign institutional selling, the regular culprits are IT and banks and financials, and large banks at that. And domestic institutions have increasingly been speaking about the consumption story because of everything that's panning out and all of the measures that are currently being taken, maybe to offset what is happening on the external front. We'll talk about that in more detail, but let's focus in on the sectoral picture first, and then we'll dive straight into the stocks that you should watch out for. Right at the bottom of the list, I would think you have banks, right? So you have the Nifty Bank that's trading about 0.75% in the red, and you had the finance pack also that is the biggest loser. So a few NBFCs are taking it on the chin today. Auto, consumer durables, consumption. just about in the green, but then better off than several other sectors. So this is the point that is proved at this juncture. Let's talk about individual stocks. And there are quite a few stocks that are moving on the back of order wins. One of them could well be GR Infra Projects. It's gotten a pretty chunky, sizable order. I wonder if it is moving. It's up just about 0.2%. It is that kind of a market where the mood seems a little bit glum. And we'll have to see whether this changes over the course of the session. But for now, it's a little bit moody. Samhi Hotels, this is on the back of a long-term lease that they have signed, or a lease agreement for 260 room hotel. It's not doing too much in trade. Biocon, it's gotten a US FDA approval for a tablet for diabetes. It's up about 1% or so. One stock that was moving and has been in the recent past is Edelweiss. I wonder if it is moving at the start today. Okay, so some impact is there, but then of course it moved up 7% in the previous trading session. So you could argue that a little bit of that upside has been captured already. HFCL, there's an optical fiber cable order that it has gotten 100+ crore, but it's not doing too much, about 0.6% in the red. E2E Networks is a really small company, but an interesting order in the AI space. It's up and about. It was 4% higher. It's cooled off just a tad bit. This is an 88 crore order. On the downside, Interglobe Aviation was under a tad bit of pressure on account of that big block. Of course, Gangwal Group selling stake, but it's okay. So no, this is Newgen. Yeah, it is in the red. Newgen Software, this is the order win. But let's move to Interglobe Aviation. It is in the red. It was in the red. It continues to do so. Of course, this is on the back of the selling by promoters, and there's one more tranche maybe that is left for the Gangwal Group that you should watch out for. Kitex, Gokuldas Exports, these are textile companies that are impacted. Of course, that remains the big talking point. There are a few more from the list also that are down in the dumps today. Rajesh Export, Vaibhav Global, these are also counters that could get impacted. Vaibhav Global taking a little bit of selling pressure today. You have SRF, Naveen Fluorine from the chemical pack that could be under pressure, but not too much being seen there. Really, a lot of this impact has been seen in the run-up to yesterday. And finally, Dr. Reddy's Laboratories. I want to talk about this one because it's gotten a temporary stay on a tax reassessment. It's not doing too much, 0.25% or thereabouts. But I would hazard a guess, Neeraj, to say that while I've been speaking, you have a few more movers from the broader markets in particular. Are you spotting anything?
So JTEKT is up about 12%. So that stock is rip and roaring. Pratap Snacks is up 9%. Puneet highlighted Traction Technologies. Pratap, deceptive. Traction Tech, I wonder if that is active too. Maybe my eyes are playing. No, not all of these stocks are active, but well, JTEKT was actually very active. But I think MGL, I wonder if that stock is up and active. Mahanagar Gas, 2.67% higher. But keep in mind that the larger story seems to be that with this 6.6% gash now on the index, that it is textiles and chemical stocks which are taking the hit. Now, Avinash, a lot of these businesses haven't performed for such a long time now, chemicals in particular. Does this make the sector an untouchable for the time being until clarity emerge?
Yeah, I think Neeraj, clearly, I think one needs a little bit of clarity because our sense is that, when this headwind has emerged, I think it's going to take at least another couple of quarters before, business resumes again. I think for companies, which are operating like Arvind, Gokuldas Exports, typically chemical companies, my sense is that you are going to see a little bit of earnings pressure in the coming 1 or 2 quarters. So it makes sense to wait for some time before the management's, comment on the kind of outlook they could share. But I think as of now, I think it would be unwise to actually buy these, in this fall. So it's better to wait for some time before clarity emerges.
Chairman, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Let's get in.